Lucy Siegel on how lending money to strangers online might just make good business.
This looks like... Sure this isn't something...
Picture this, you've got a brilliant business idea, or perhaps you want to expand your existing brilliant business. Either way, you need to borrow some money to make it happen. So, where do you go when you know your idea is a winner? Well, I know a man who might be able to help.
Paul Soane started his advertising agency, ID Experiential, 20 years ago with a £2,000 loan from his business partner's mother.
Borrowing money from my business partner's mum was the last resort. We were too wet behind the ears, 20-somethings. A bank wouldn't have taken us seriously.
From that £2,000, he's now the owner of 3 companies worth a cool £32 million. Of course, he paid his investor back with interest. Paul's now lending his spare cash to individual businesses through a new kind of financing called peer-to-peer lending.
So Paul, show me how this works.
This is Funding Circle, where I do my peer-to-peer lending. There's a whole list of companies on there that are looking to borrow amounts from £20,000 up to £100,000.
Are there any on here that you think are just really good ideas?
So there's one particular one at the moment, and it's a car dealership in Leicestershire. They need to get some more second-hand cars to sell.
So are you going to lend them some money?
Yes. Should we do it now?
Yeah.
It's a business that wants to borrow £100,000. What you do as a lender is you bid for the amount that you want to lend and the interest rate.
Peer-to-peer lending works by borrowing lots of little chunks of money from many different lenders who choose their own interest rates and compete with each other by offering slightly lower rates for the money they're offering. Once the desired loan amount is reached, it goes to the borrower, who then pays it back over time with interest.
I want to lend £200 and I'm going to pick an interest rate 9%.
Is it pretty disappointing when your bid hasn't been successful?
Yeah.
Paul won his bid the next day, which means he'll make £18 profit on that loan. Doesn't sound much, but the more you invest, the more interest. And 9% is a lot higher than any savings account. Old St Andrews is a liquor bottling plant that looked to the internet for a cash injection to expand and diversify its range. Today, one of its many peer-to-peer lenders is visiting for the first time.
Bill, what attracted you to this business?
Well, I just liked the way they presented themselves. I read how Bob had turned around the company in 4 years, and then he was bringing his production back from China. He was going to save him money, better credit terms, quicker deliveries.
Is it not quite strange to have someone invest in your business when you've never met them?
Well, I met Bill just about 20 minutes ago, and because it's a straightforward borrower-lender agreement, he knows I can pay his interest, and when he'll get it back, I'm happy to borrow it, and that's all I need to know about Bill.
And how much did you invest?
In the end, I think I put about £2,000 in.
Over the past year, Bill has made £170. That's 8.5% gross profit on his investment with Bob. He's happy with this investment, but he's not always so lucky.
Have you ever lost money?
It was a very small amount. I think it was about a 12-month investment I took on. They didn't pay the last 2, so it wasn't a lot. It was under £100 actually.
It's not just businesses borrowing hard cash. Personal loans are available too. Zopa has overseen more than £260 million worth of loans in 7 years. Anyone with a decent credit rating can borrow money for anything from a new car to a new kitchen. But who's lending all this money?
Many of our lenders live in the southeast of England, and they're lending on average about £5,000 to £10,000. They're typically in their late 40s or 50s. They're not high net worth individuals or big investors in other assets like the stock market. They're very normal saver type people who are simply looking for a better deal.
What's the catch, you may ask? Well, if a bank goes bust, your savings are protected by the government. What's the protection for peer-to-peer lenders? There isn't any. It's a risk and you could lose the cash you invest. It is a young industry, but so far losses from bad debts have stayed low at around 1 or 2%.
The risk lies at an individual level between lenders and borrowers, in that when a borrower borrows money from a lender, they might not repay it. So the way we mitigate that is to make sure, one, that we do the best job we can in ensuring the most sensible and creditworthy people borrow the money in the first place. And the second thing is we spread your risks as a lender to make sure that you lend lots and lots of very small amounts of money to individual borrowers. So our lenders will suffer some credit losses, and our job is to make sure that they suffer less credit loss than they're expecting.
It appears a quiet revolution is underway, and who knows, it might be that we may not need the high street banks as much in the future.